for
tonight.
sure. Anytime
Okay.
anytime you're available, I'll make time just to show you this. Like, I mean, I could go over it real quick, and then we'll go over it deeper. So I'll
Yeah,
just
yeah, yeah. That's cool. That's
yeah.
cool. Let's do that.
So I'll show you. So this is like an ideal swing, right?
Right.
Ideal swing. Candle 2 closes bullish, right?
Yeah.
Candle 3 small wick, big body expansion, and then we close above the range that we went up on it, and it creates like an order block here, and we just tap back
Okay.
into it and continue the expansion. So that's like an ideal
Right.
swing. So we have candle like 3 candles. Candle 2 becomes like it's like a bullish candle, right?
Right.
So let's say in the scenario where, like in this scenario, we can anticipate candle 2. We can kind of trade this as a reversal in a lower time frame, and then we can trade this as a continuation expansion. Candle
So
3.
okay, in this example, and this is probably I'm going back here, um, to elementary.
Yeah.
But in this example, where's the perfect entry on? Let's say that swing up, right?
Yeah.
Where's your perfect entry? Do you wait for that candle closure above, like the order box to be created?
Well, okay, so let's say for example we're looking at this, and this is a like a 1 hour time frame, right?
Okay.
So this is a 1 hour. Inside this candle 2, on the 5 minute, there's a change of state of delivery, and
Right.
then once candle 3 opens, it'll tap into the change of state and continue up. Because
So you want to wait for that tap of the change of state, then that's your entry point.
yeah, but there's it's different like there's different like scenarios, right? Because sometimes it doesn't
Right.
tap
Yeah.
into the change of state. Sometimes it taps into the order block. I mean, into the fair value gap or the inversion. But the key, what I'm trying to get across is that inside this reversal, that's where you're going to find your order flow PD arrays. Like there's going to be like a fair value gap here, and like let's say the order block here or whatever, you know.
Okay.
And that's where you're going to find like where your entry point's at. Normally, sometimes all of this does is just wicks very small and then continues to expand quick.
Right. Right.
But yeah, so that's candle 2. This is the ideal like formation of a swing.
Yeah. Textbook.
Textbook, yeah, exactly. And then everything else that comes out of like the different variations, there's just variations of this. So the next one we'll look at is like a candle 2 closure. Like let's say we do still have a swing, right?
Yeah.
But now the swing is, it closes bearish over here, but the body closes above the previous candle's low. See how the
Okay.
body closes above?
Yeah.
So now in this scenario, it's a bit harder to trade the reversal here. So we would wait for candle 3. So we wait for
Fuck, I
candle
never knew
3.
there was so much science to swings. Okay.
Oh yeah, for sure, yeah. So then over here we wait for candle 3 to open, and then that's where we would find our entry point. You could pretty much like enter off the open.
Oh shit. Okay.
Because the characteristic, remember, it's like a small wick, big body. So we're looking for the expansion. That's what we're waiting for, the expansion of the move.
Right.
So that's a candle 2 closure. Candle 2 closes, candle 3 we trade.
Okay. But you're waiting for, okay. So the indicator on this one is
It's just this. It's that the body closes above the low, and it's starting to
above the
form a
low.
swing. Yeah.
Okay.
Because let's say, for example, let's say you can't see candle 3 and 4. You can only see 1 and 2.
Right.
Well, now your next step is like, okay, well, I'm anticipating this to be a expansion.
Go back to the first one real quick.
The ideal.
Yeah. Okay. Because I'm trying to look at the candle closure.
Yeah, so this closes bullish. See how it's closing bullish?
Right.
And this closes bearish.
Oh. Okay. Okay.
That's the difference, right?
Okay. Okay.
Yeah, so that's a candle 2 closure. But same idea. But you see the difference here and here? Let me just make this smaller. So you see the difference between the two is that in the ideal formation, we expand far above, and we can use the order block to continue off of it.
I can't see that candle that you're on. I think. Yeah. Yeah.
This one.
Just move it over just a little bit. There we go. Yeah. I'm looking at the candle. There we go.
Yeah. So it pushes off the order block that we created because we closed above.
Right. Okay. Okay. Okay.
But in
Okay.
candle 2 closure, we didn't close above. We're still in the range, so we're still anticipating it to continue up, but it's not like ideal like this. This is moving much faster, much more expansive. This is still
Right.
moving in the direction that we want it to go, but it's not as fast, right?
Right.
So
Okay.
then like candle 3 we can trade as a continuation or expansion, and then candle 4 we can trade as a continuation expansion. So when we open up here, like let's say I'm looking at this and this is a daily time frame, right? Like these are daily candles.
Right.
So let's say if these are daily candles, let me send this back, take this. So if these are daily candles, I can anticipate like on the 4 hour, if I go down one time frame, there's going to be some type of fair value gap over here, right?
Right. Yeah.
And I'm anticipating the daily to open up and the daily wick to come down and tap into that fair value gap on the 4 hour and then continue the expansion up, because I know that the previous 2 days created the swing. You get what I'm saying?
Uh-huh. Okay.
Yeah. So like, for example, we could probably see this on the chart. I'll find a real quick example. Candle like this, for example, right? I'm on the 4 hour. Let me go on the daily. Doesn't matter which time frame, but just for continuity.
Yeah.
Move all my drawings here. Well, for example, here even, right? Candle 1, candle 2 here, and then candle 3, I'm anticipating it to expand up because we're candle 3. And if we go on the 4 hour here, well, the gap here is that new day opening gap or new week opening gap here.
Right. Right. Okay.
So in that new week opening gap, new day opening gap, we created the swing,
Down. Yeah.
right? So here,
Yeah.
this is a candle 2 closure swing, you see? Oh, sorry, wait, did we go over that yet? No, we didn't. So that's another type of swing where the body closes below.
You did go over that.
Where the
Remember, I
body
wrote that
closes
down.
below?
That was the one I wrote down. Yeah.
Okay. Oh, I think I removed my drawings. So the body closes below over here, right? So that means that we would have to wait for candle 3 to close and we would trade candle 4.
Trade candle 4.
Yeah,
Okay.
yeah,
Okay.
because we don't know if this is going to be bullish. Because, like, let's say if we're looking at it like this, right? And this just closed like that. You don't know if this is going to continue down.
No clue.
No
Yeah.
clue. So we have to wait for candle 3 to close and then trade candle 4. Or if you can anticipate candle 3 to expand because we're in a key time frame. Like you're basing it we're in a key area. You're basing it off of your idea of the daily. Because if you recall on the daily, we had the expansion, right?
Right.
So if we have the expansion here and we have candle 1, 2, and we're anticipating this expansion to happen as candle 3, well, that means that if I'm over here and London made the low of the day here, and that's a characteristic of London, then I can anticipate the next candle to expand up. And you see how we made these like lows like this?
Right.
So there's liquidity up here. So I would aim for the liquidity here and for the continued expansion. So let's say I'm anticipating this to expand up, but the 4 hour is unclear. But I know that this could be potentially the swing point because of the London like time frame, like because the London session made the low and we're in the new day opening gap here.
Right. Okay.
You know what I mean? So then I
Yeah.
can go down lower. Now I go down lower and now we have a better swing to play off of. You see?
Yeah.
So now we have a candle 2 closure. Right? So now if I go next candle, just to see what it looks like, I'm anticipating it to expand. Well, it came down, and then it expanded up because this is a candle 2 closure. Right?
Damn.
So now, let's say I'm still basing my idea off of the daily and the 4 hour because they're multiple ideas that are aligned together. You know what I mean?
Yeah. Yeah.
And they all play together. So if I'm anticipating this to continue up, then what I would want to see is we're on the 1 hour, right? So that means that
Right.
I can like isolate this range right? So I'm isolating this. Oops, I'll do the extended one. So I'm isolating this candle, the hourly candle, because I want to see the next hour expand. Then I can go down on the 5 minute, right? And find the fair value gaps here.
Oh, shit.
You know what I mean?
Yeah.
As to where the wick will reverse from. And over here we have the order block, right?
Okay.
And here we have the red line here is the 50% of the range.
Right.
So if I go back to the hourly, let's see where it expands from, right? The next candle. So you see how
Almost
we open?
50.
Yeah, we open, we push down, we almost tap the 50, we're almost at the order block, but then we start to reverse here, right?
Yeah.
But remember what I told you, right? The wicks equals the swings. So if we have a wick here on this candle, forget about the time frame too, just the characteristics of a candle. If we have a wick here, a wick on a higher time frame here,
There's a swing on the lower time frame.
exactly, is a swing on the lower time frame, right? Very botched swing here, but you get what I'm saying?
Yeah.
1, 2, 3. It's a swing, right? So if we have the hourly, we're on the hourly, and we're seeing that the characteristics is expansion. So where would I see this swing? What time frame would I see this swing from
What
this
time
wick?
frame are you on now?
I'm on the hourly right now.
The 15?
15, that's a good one, yeah. 15, exactly. And you can also use the 5. So you see the swing
really?
here? Yeah, you can use the 5 too. Because sometimes the hourly moves, like the 15 moves like fast. So like 5, you can kind of see a swing here forming. You see what I mean?
Okay.
See here? But yeah, you're right. 15 is also valid, you know? So the open of this hour was 7 o'clock here. So what do? We push down. And then from here, we swept the previous hourly low. And then we continued upside, right? That's the 15. If I go down on the 5, what does it look like? Well, we're creating a swing.
Really clear.
Very clear, right? So let's say you miss this move. 1, 2, 3, you miss this move, but you can catch candle 4 to the expansion. Because you can see that it's moving in your direction. We've inverted this fair value gap. This 5 minute fair value gap over here. We push down, we're pushing back up. And now with this move up, we're expanding up.
Damn.
So on the 1 minute, even on the 1 minute, you can like still use the same exact logic that we're looking at, you know? Swing here. We're above the 50% of the fair value gap here, and we're swinging and we're expanding. At this point,
can we let's 100%. I want to go over this later.
Yeah, we'll go over it again. I'm just going like through the basics. So that's wait, did I go over this one? Candle 2, I went over candle 2 closure, candle 3 closure. Okay, there's like one more. I showed you the candle 3 closure, I think, right? No, I didn't. This is candle 3 closure. The body closes below, right? The one that I just showed you the example of.
Yeah.
Candle 3 expands. We don't know if it's going to go up or down. So we wait for this to close, and then we trade 4 as a continuation. So again, if you're trading 4 as a continuation, you can use those lower time frame levels inside this candle range. So the same thing that you're looking at, the ranges, right? The 15-minute range. Well, now you can use this range of this candle to find the fair value gaps and the order blocks in there in order to find where the reversal point will be of this higher time frame candle.
Now, is this more of a snipe, or are you kind of just like looking at other liquidity points to attack, or are you going for like a specific 2 to 1?
2 to 1. Yeah, I go for 2R. Even if I catch this, I'm just finding the direction of where it's going.
And then where would your stop loss be placed?
Well, it depends. I would have to go on the lower time frame, but let's say if this is a lower time frame, right?
Yeah.
Like if this is a lower time frame and I'm catching this, then I would put my stops at the swing low here.
At the swing low. Okay.
Yeah, and then aim for the continuation.
Copy that. Okay, that makes sense.
You know, if I want to like milk a little bit more on my R, I can move it down to the bodies. Like disregard the wick and move the stop like down to the body, you know?
Right.
Or I can move it down to this low candle over here. Because if this is a swing, it shouldn't come back down here.
Right.
You know?
That's a fact. That's a fact.
You know? So, especially if we have an SMT too. Because then it'll be protected. But, like, yeah. That's candle 3 closure. We'll go over it again later in more detail. But, like, just as a speed run. And then there's a one last more, like, swing. It's this one. It's the candle 2 and 3 expansion.
Mm-hmm.
Like the reversal expansion, where candle 2 is both the expansion and the reversal.
Right.
Like you've seen this a lot, right? So usually this happens at 10 a.m. Like when we already reach an area of a higher time frame point of like interest, like this, like a key level. Let's say this is like a, you know, like a weekly fair value gap, and these are daily candles, right? So day 1 we come in, day 2 we just sweep the previous daily low and just expand out and like expand away from it. Okay. So the same characteristics here as a reversal. So this is the same as an ideal. This is the same as an ideal swing. Same thing, like this. Both of these are the same in the way that they act. It's just that you see both of these, right?
Yeah, I can see them.
Okay, so both of these act in the same way. It's just that this one, the ideal formation, has both the reversal and the expansion separated. This one just has it together. Because if I take this time frame, like let's say I'm on the daily over here, on this time frame, daily. If I go down on the 4 hour, it would look exactly like this.
Right.
This reversal would look like this.
Okay.
You see what I'm saying?
Yeah.
Because you see how all these bullish candles are pushing up?
Right.
It's the same thing as this.
Yeah. Okay.
See what I'm saying?
Yeah.
They're like combined. Yeah. So like, for example, if I go in a chart, like what happened last week with this reversal. Okay. This 4 hour, we swept the high and we reverse up out of it, right? So this is a candle 2, 3, like reversal expansion, right? Exactly what we just looked at. If I go down on the 1 hour, right? Well, this is very violent, right? So this is 1, 2, 3, the swing.
Right.
Candle 2 closure. So candle 3 we could trade. Right? Look at the expansion on candle 3.
Oh yeah.
We just that's 11 o'clock. 11 o'clock. We open up and expand like, and this is like we reached into external here. External sell side, and then like on a higher time frame over here we were in a fair value gap like this. So if I go down on the hourly here, yeah. So like we tapped into that fair value gap on the daily, reversed. And if I want to have an even clearer look, because if you think about it, this wick, what is that going to show you? Another swing, right? So if I'm on the hourly and I come down the 15-minute, well, it's showing me an even clearer swing on the 15 as it's forming, right?
Damn.
And now you have your change of state order block here, right? These two candles get like disrespected. We close below it, so that creates the order block here. So now we're pushing down. So we have the buy side of the curve, and now we have the sell side of the curve.
Okay. Yeah.
Buy side of the curve, sell side of the curve.
Yeah.
Liquidity. Our target, external. Liquidity here. Oops. Liquidity. Oh my god, bro. Trading view. Liquidity here. You know, we tapped into the higher time frame here, key level. On the daily, this is daily, key level. We have liquidity here that was built up from Asia and London. right?
Okay. Yeah.
So we'll go over it more in depth later. But yeah, like just to show you the different types of swings, like those four types of swings, which are basically pretty much like two types of swings. If you understand the logic behind it, like, and you combine these two together, then they're pretty much the same swing. You know what I'm saying?
Yeah, I actually needed that because yeah, the swing. I'm always. I don't know why I was trying to do it for the long. I stopped doing it, but I didn't. I wasn't aware of like the candle fork trading.
Yeah.
Like that's the where you want. I'm thinking, okay, damn. I'm trying to catch candle twos and shit and
No,
guess.
no, no. You can wait. You can wait for the confirmations.
Yeah.
You can wait for the confirmations. If you have something like this and you only see candle 1 and 2, well, now you know that like you can anticipate candle 3 to be an expansion candle. You remember the different types of candles we looked over? There's like the indecision and the expansion. Well, we're trying to trade expansions only. That's what we're trading. We're trading expansions.
Okay.
So
Okay.
if we're trading expansions, we skip over all the consolidation. We don't want to be involved in that. We don't want to be involved in any consolidation. So this is usually where the consolidation would happen, like candle 1 or 2. You know, well, candle 2 would be the reversal. That's where the reversal would happen. So like in an ideal sense, you would see a V shape like that, like a quick V shape inside that wick, and then continued expansion. We'd create fair value gaps, and then candle 3 would open up, tap into the fair value gap, and expand. Candle 3.
Yeah. Let's jump. Let's jump over. Let's jump over tonight.
All right, sounds good, man.
I got some company here.
Yeah, no worries.
Thank you, brother.
All right, no problem, man. Talk to you soon.